You could wake up one morning and find your paycheck reduced by up to 15%, and the government doesn't need a court to do it. Starting the week of January 7th, 2026, federal student loan garnishments began rolling out again. If you're in default or even near it, this narration is the emergency playbook you need in the next 30 to 90 days to stop garnishment, protect your take-home pay, and limit damage to your credit score. This is a step-by-step survival plan, immediate actions to take the second you get a notice of intent to garnish, how garnishments actually show up on credit reports, the urgent documents to collect, dispute and negotiation strategies that buy you time, and a 30-day and 90-day recovery roadmap to rebuild your credit and stabilize your finances. Stick with this. The best part comes in the negotiation scripts and the exact documents to show your servicer and employer that can pause garnishment fast. Quick disclaimer, this is educational information only, not legal advice. If garnishment threatens your ability to pay essential bills or you want legal representation, contact a qualified attorney, your loan servicer, or a nonprofit borrower advocate immediately. Here's the context. The Department of Education resumed certain collection tools in 2025, tax refund offsets and benefit offsets, and then began sending notice of intent to garnish letters the week of January 7th, 2026. Initial reporting suggested about 1,000 notices went out in that first batch, and broader rollouts will follow monthly. Federal law requires at least 30 days notice between that letter and employer withholding. Once withholding starts, up to 15% of a borrower's disposable pay can be taken. That 15% is a cap, not a sentence. You have rights in that 30-day window. You can file for a hearing, negotiate rehabilitation or consolidation, or arrange voluntary repayment. Those actions can stop the garnishment while your case is reviewed. Quick question, do you know whether your student loan entered default at 270 days delinquent? If not, pause and check your account now. Default is the usual trigger for administrative wage garnishment. I'll explain how to confirm that in a moment. If you get a notice of intent to garnish, treat it like an emergency. In the first 48 hours, don't panic, but collect evidence. First, save everything. Scan and save the original notice, any loan statements, your payment history, emails or letters from your servicer, and any employer payroll notices. If you receive anything by mail, take photos of the envelope because the postmark can matter. Second, request a hearing in writing. Federal rules give you at least 30 days to request an administrative hearing. Do it immediately and send it certified mail or through the servicer's online portal so you have proof of submission. A hearing request pauses garnishment while it's pending. Third, contact your servicer and the Department of Education and ask for options: rehabilitation, consolidation, income-driven repayment, recertification, or temporary forbearance. Get any promises in writing. A hearing request doesn't guarantee you win, but it buys time. Time is everything. Use it to gather proof and to line up repayment options that legally fix the default. Many people assume a garnishment pops up as a separate garnishment trade line on credit reports. That's not usually how credit reporting works. The administrative wage garnishment itself is an employer withholding action. Payroll records don't automatically create a garnishment line at the credit bureaus. What typically gets reported is the underlying loan, delinquent status, charge-off, or a collection trade line if a third party handled collection. So watch for charge-offs or collection trade lines tied to your federal loan account number, incorrect balances, duplicate collections, or stale dates of delinquency, and accounts that should be in in-school status, repayment, or rehabilitation, but are still showing as default. If any of that is wrong, you can and should dispute it with the credit bureaus and simultaneously present correct documentation to your servicer so they can update their reporting. Within the first week, take these defensive steps. Place a fraud alert or a credit freeze if you suspect identity theft. A fraud alert is free and a freeze stops new credit from being opened. Be aware, a freeze will not stop your servicer from reporting negative history or stop garnishment tied to an existing federal loan, but it can prevent scammers from opening new lines that would hurt your score further while you fight this. File targeted disputes for the high impact errors first. Wrong balances, duplicate collections, and incorrect dates of last activity. File online disputes with Equifax, Experian, and TransUnion and attach documentation, your loan history, rehabilitation paperwork, or payoff receipts. Include a brief statement in the dispute portal such as, "I am disputing this account because it is reported as in default while rehabilitation or a hearing is pending," and attach supporting documents. Add a consumer statement of about 100 words saying the account is disputed and a hearing is pending. That won't automatically remove negative items, but it flags to future creditors that you are actively disputing the entry. A quick myth buster: a credit freeze does not stop your servicer from reporting negative history. Fixing reporting errors requires disputes and servicer corrections. Now let's talk negotiation, the part most people get wrong. Don't ask for forgiveness on day one. Ask for specific legally recognized fixes: rehabilitation, consolidation into a direct consolidation loan, or enrollment in an income-driven repayment plan and recertification. Follow this tactical sequence in the 30-day window. First, file your hearing request immediately to pause garnishment. Second, simultaneously submit a rehabilitation application if eligible. Rehab typically requires 9 on-time monthly payments to remove default status. Ask your servicer for the scheduled payment amount in writing. Third, if rehabilitation is not feasible, request consolidation and ask for a payoff amount and a timeline. Consolidation can cure default if completed before garnishment starts. Fourth, if you qualify for an income-driven plan, submit your application and request expedited processing due to pending garnishment. Use this written phrase to be clear and specific. I request temporary suspension of garnishment pending administrative hearing and completion of default resolution steps under federal regulations. Please confirm receipt in writing. Document every response. If your servicer promises a pause or to accept documentation, get the confirmation number and a screenshot. If you stop garnishment or pause it, use the next 30 days to stabilize your finances and lock in fixes. In week 1 and 2, stabilize cash flow. Create a bare bones budget focusing on housing, food, utilities, and transportation. If you need temporary cash, consider a small personal loan only if the terms are clearly affordable. Avoid high interest payday alternatives. In week 2 through 4, lock in a repayment pathway. Complete rehabilitation payments or consolidation steps. If you enter rehab, save proof of each payment and request a letter from the servicer confirming enrollment. If consolidation is your path, get the exact date the default will be discharged. For credit, file disputes for any errors and follow up weekly with bureau portals. Monitor all 3 credit reports once per week and use a free credit monitoring service if you can. If the servicer stalls, file a complaint with the Consumer Financial Protection Bureau and your state attorney general. That can move things faster. If you survive the first 30 days, the next 60 are about cementing long-term solutions and rebuilding credit. Make sure the default is fully resolved on servicer records and get a cure or consolidation complete letter. Confirm the servicer has updated reporting instructions to the credit bureaus and ask for the exact account status code they will report, for example, current or in repayment, not default. Add positive trade lines by bringing current any other loans or credit cards and making on-time payments for 90 days straight. Even small secured credit cards or a credit builder loan can help. Reduce credit utilization on revolving accounts to below 30%, ideally below 10%. Keep monitoring for re-aging or duplicate collections. If negative entries aren't corrected within 30 to 45 days of servicer confirmation, dispute with the bureau and include the servicer letter.